right. We're looking at the NASDAQ 24 tick Renko chart with the algo that I use to find trades. This is a combination of Simon's algo from the Trade to Perform room, along with some of my own ideas. And I know it's busy, but all we need to look at is what's happening right here. So you can pretty much ignore all of this and just see if we're going to find any patterns to trade. I got pretty close to hitting my daily goal today. I don't need to find any trades. And honestly, doing the stream will probably keep me from over trading, hopefully. But if it sets up well, I will take it. Although it is almost the last half an hour, and I usually don't trade the last half an hour. So let's see here. We're gonna mute the desktop. Okay. So what I was gonna do here is see where the volume was on this high, or wave to the high. High volume notice here. All right. So if we want to short, and we want to be conservative about it, because we're not sure if this is bearish or not. And I mean, the day was clearly bearish, right? But the problem is here we got under the low from yesterday on NQ, but I don't know if it's a problem, but the challenge, I should say, on ES, it did not get under the low. Well, okay, it got under the daily, the regular trading hours low. It did not get under the Globex low. So when this kind of thing happens, what usually results, in my experience, and I've been watching just the equities for more or less just the equities for maybe 18, 20 months, let's say. And before that, I was doing options and ETFs and stocks and cryptocurrencies too, but just focusing just on futures and primarily equities. When there's a inconsistency like that between ES and NQ in particular, you can get some pretty unexpected reactions, and it's usually challenging trading. I mean, there's a lot of situations that are challenging, but one of them is when you've got one market that has like liquidity sitting down here potentially from that overnight session. Even though we did clear out the liquidity from yesterday's RTH, but yet we have the weaker one, NQ, pushing down underneath both the RTH low and the Globex low, and you can see that that's the low of the year, right? So NQ made a new low of the year, and ES. SPY would have, but ES did not, right? SPY would have because the previous low on ES that was here that didn't get taken out, that one was done during the London session in Globex. Yes. But you can see today on ES, we closed higher, of course, and then traded back through this, what was basically like, this was the afternoon spike. Oh, here, let me show you the timing. We'll do it like this. We can watch both. So if you look at the timing, this is noon here, right? And then we have this little pullback. And then this was the afternoon spike. So as soon as ES and NQ gave up this afternoon spike here, which happened during London, we already knew that this was the place where you wanted to get short. If you didn't catch it up here, I actually showed on the stream yesterday. If you look at the London stream, or no, maybe it was the RTH stream. One way or another, one of my streams, I talked about the fact that the close was actually kind of bearish, even the day was really bullish, and that there was a good short opportunity that could set up in Globex, and then it did show up, and so we got continuation on that into the regular trading hours today, when we had some Fed speakers talking about recession and rate hikes and all that stuff. And you'd think that eventually the market would like get the picture that they're like, I don't know, going to raise rates for a lot longer than people think, but it doesn't seem to last. You know, you get these pullbacks and then they just rip higher. The one exception was the Fed meeting, which is interesting because the Fed meeting, which is here, got this big retrace, but it couldn't even take back that low. See that? This 38.40 was a really stable. Like this was well auctioned here, and so we were easily able to get through all of this. And once you see this kind of huge range movement, you know that the auction here is done. You just don't know which direction you're going. But once you go one direction or the other and come back and can't get back into there, there's a good chance that this liquidity gets taken, 38, 34, eventually. But to get a hold beyond that is going to be very challenging. So I actually don't mind being bullish here, personally. I know a lot of people are bearish, and fundamentals are definitely bearish, don't get me wrong. But if you're just speculating, like, there's really no better place to get long in this kind of a market other than under previous day's lows, right? It doesn't mean it's going to work, but if you're going to pick a spot to like plant your flag and you're going to hold it as long as you don't like break support, like this is kind of where you do that kind of thing, right? It's just the question is this balance, because that's only going to work during a balance period. If it's bearish, it'll roll over. But if we're developing a new balance, which I think is very possible, that this whole thing here becomes a balance zone. This could easily become a balance zone, in which case we traded under it and we'll come back into it, right? So all I'm trying to say is, even though we haven't taken out yesterday's low on ES, and we already did on NQ. So in my view, this is all we needed to do to take that liquidity. And if they find buyers there, ES will just have to clean that up later. I would have preferred, and would still prefer, that ES takes out this low and puts in more excess. But you can see here, even though it was London pre-market, RTH, well, pre-RTH market, we actually did get a little bit of excess here, which is here. You'll see it on this chart. Or maybe this one. Wow, you don't really see it. Okay, the daily then. Yeah. Eventually you'll see that if we would bounce here, you would have actually some excess down here. So it doesn't mean it's going to bounce, but like I said, it means that if you're not, you can't really short here is the problem. If you wanted to short, you should short on retraces, but you can't really short down here into this. And so your only choice is wait till they start to bounce and then consider getting the long, or do nothing. Right? Or scalp inside of each range, which is my preference. But a lot of people don't trade like we do with a mean reversion strategy. If you're more directional and you want to know, should I be a buyer or should I be a seller all day, like, you got to pick your spots really carefully. And you got to know what phase the market's in. And for the time being, it looks like we are in some sort of balance to me, where but the difference is that range has been expanding, so it's been very confusing to traders about like whether or not there's momentum or not. And when you get these, what I call expanding negotiation markets, you get a lot of like slow bleed, choppy, and then like swift moves with no retracements. It's all really hard to trade. The only exception is where it's not so hard to trade is getting underneath the old lows and finding buys down there, and getting above old highs and finding shorts up there. But it's, you'd have to be really disciplined and patient to accept that. Here, I'll show you on NQ. So on NQ, yesterday, when we did the London session, I had marked this off as fair pricing, and I said that we should be able to travel through this area relatively easily. During London, we were looking at this buy here. Um, I got a piece of it, but didn't didn't take it at the spot that I think I should have. But I had to go. I went to bed before we got this drop, and so like somewhere in here is where I went to bed. But in the same sense as we saw this as balance, we can now do the same thing here. Here, let me get rid of these fibs. I think I've proved the point that you can draw the fibs in different ways. I'm going to get rid of this for now. But I don't think I'm going to get along. I mean, they're just pushing. The problem with just buying it here is I need to have it set up correctly. And while I could just like buy one of these aggressive, so here I'll show you later. But there is aggressive way. There are aggressive ways to trade once the trend is identified. One of them is to to follow aggressive traders that come in off of this lower quartile. The trouble with that is that it's not going to work 70% of the time. It's going to work. Well, first of all, you have to make sure you're actually trading with the trend, because otherwise it's going to work like never. Right? But if you're trading with the trend, that setup can work maybe 50% of the time. But there will be a time where it stops working. And so if you just keep doing it and keep doing it and keep doing it, and then it stops working and you don't stop taking the trade, you risk giving back a lot of your gains. So momentum trading in general is just really hard on the equities. In my opinion, it's a lot harder than trading mean reversion because your win rate is not going to be as good. You can still be profitable, but you're going to lose a lot more. And like, it's hard to lose trading NQ. Like it really is hard to like take multiple losses in a row and then hold. Because if you're a momentum trader, not only do you have to keep taking trades, but this actually lined up perfectly with what I wanted to. I just wasn't looking at it. But not only are you taking more trades and taking more stops, but it means that you actually have to hold on to your winners a lot longer. And so sometimes you're gonna hold those winners, and it's gonna roll over before you hit your target, and you're gonna give back a shit ton of money, right? And that's just the way momentum trading goes. Like you can trail a stop, sure, but like then you're gonna miss out on like extensions, right? Like there's no perfect system, and the problem with momentum is that if you don't do very well giving back gains, momentum trading might not be for you. Because I learned as a swing trader how difficult that was. I did that for years. Swing trading ETFs and stocks primarily, not the futures, but the like options with call spreads and put spreads, and mostly put spreads back then, bull put spreads, but also like just regular equities too. And yeah, when it's working, it's great, but when you run into a sideways market, you end up getting trades that set up perfectly and they work, quote unquote, but they don't hit your target, and then it rolls over and hits your stop, and so your what looked like was going to be a green trade just like turns into a full stop potentially. Otherwise, you have to trail your stop so tightly that you miss out on like a huge multi-week gain, right? So it's just like making the decision between those two things and being able to decide when should I hold my runners and when shouldn't I it's a real challenge. The best in the momentum business usually have a way to determine ahead of time whether or not they should even be trading that system, though, right? So that's the most important thing, is if you know when to turn it off and stop taking these trades, like I'm talking about this entry here, which is an aggressive momentum entry. And I will show you how to find it. If anyone's curious, just ask. But it's identified by these symbols and the colors and stuff. I can identify, and then it needs to be in the right location, which is why we have this channel and why I drew this. But you can also find them by marking off these bars with the white triangles if we're bullish, and that tends to be support that holds. So the hard part is you'd usually have to put your stop underneath this, because sometimes it starts to go and then it goes down and it rips. That's not like I could probably scroll back and find like 3 times where that's happened with the trend. Um, so you do have to either be liberal with your stop or else very willing to come right back into it. But then if it stops again, personally, I'm done with it, because like you could say the exact same thing on the short side too, right? Like you'd say like, oh well, here's an algo signal that's that's positioned correctly at the back of the channel. Now we're not bearish, and this is how you can know for sure. But you've got all these signals going off, and it doesn't go anywhere, right? And so when it pulls back, should I take this one? Like, does that count still, right? Or is it not bearish? And so being able to tell the difference, like between when your direction is right, but your timing was off, versus like you're reading the entire situation incorrectly is harder than you'd think, especially when you're day trading, because there's so much information, right? And that's where sometimes it is easier to do this with like less signals. And for people who aren't used to looking at these algos, like this system is a lot easier to learn, and that's why we use that in the room. But each of us who've been doing this for a while, who have the algo on our desktop, like we customize it to whatever it is that we like to do, right? So this has additional filters and signals for me to know when not to trade and to know where to target my trades location-wise, and then a couple extra trade signals that I am working on like optimizing, but I'm not yet taking the trade signals as a trigger to enter the trade. But the only way to know whether or not they're working or not is to forward test it. I also back test always with out of sample. So I have markets that like I don't trade and time periods that I didn't trade, right? And so I can go back and find some out of sample market like periods where I don't know if. See, it doesn't matter if you actually trade it. It's whether or not you know that the system worked at that time or not. Because if you know it worked, then you're going to optimize it to work best in that scenario. So like out of sample testing is really important whenever you're using something like this, like some sort of computerized objective method for finding trades. So see, this one didn't work, but you can see that this one clearly did. What I didn't do is redraw the DVP or draw the volume profile on the wave up. Okay, so I didn't miss that trade. So this is kind of a big high volume node here. But to get short now, we need volume to get under that, which it did. No, it didn't. Not yet. We need this to be bearish. So if this is bearish, if it closes down here, no, it doesn't look like it will. I'm watching this yellow line, which is the volume inside the bar, the volume point of control, and it's identified by a dash when it interacts with a bar. But the white line, the yellow line, is very important for me to know whether or not it's time to look for shorts or longs. I'm watching for certain interactions and locations with that bar constantly. Now the algo is also watching it, thankfully, so it can signal me when things change. There's another aggressive entry for the long. It's the exact same thing as this one. So, whoops, the pink one. So if you took the pink one with the white diamond, because it's bullish and you're aggressive, like there's no reason not to take this one now. It's just the same signal. And then if you look, like I said, the other way to find this is to locate triangle bars. This triangle bar was way back here, white triangles, is way back here. So what that means is that you'll probably get your risk off here, but what they may need to do is come down here and then bounce. Even if it's bullish. Even if it's bullish, that would be okay. Now the interesting thing is because all of the volume on the wave to the high happened right here, and we're trying to, if we did get under it and then we rejected from this area, it's actually short. It's bearish. Okay, so now that I've got that white triangle, I can measure this volume volume profile, and we see that all of the volume on the way down is at the top. This bar with the algo was the like I said, aggressive sell signal that I didn't take. It's the end of the day, and I'm not gonna give away a good day and trade like guessing this is like a yeah. It's like I don't have any reason to think that that's gonna be the top, but it's the same signal as this, right? And this one didn't work, and that one did, and that's just the way it goes. You just have to decide what does your win rate need to be to keep you in the game, and then only trade the trades that give you that win rate, right? Which means that I'm gonna skip some trades because right now I'm working towards a 70% or better win rate, and so if I know that the trade only gives me a 62% win rate or something on my back tests, I'm gonna skip the trade for now until that changes or until my conditions change and I'm okay taking stops 40% of the time. I'm just currently not okay taking stops with this size 40% of the time. And when I say I'm not okay, I mean I'm not going to perform well, right? It's going to mess my mistakes, mess with my trading. And so this tends to happen when I size up or when I change like how I'm trading or when the market shifts. And the best way for me to handle it, other than sizing down, which I can also do, but especially right now because I've been trying to size up, which has been a little bit of a struggle just psychologically. Like having days where I'm down like twice as much as I used to make on a good day. And yet that being okay because in like 2 trades I can make that back, right? That like it takes some getting used to, even though the system is totally scalable and like I've been sharing my P&L, like it's been consistent, but it's just psychologically challenging to overcome that like sticker shock. And then I get the opposite side too. Like before when I was trading, like when I was just learning this system and like getting used to it and trying to figure out which trades I want to take and stuff like that, I was doing it on a very small size with a cash account in the micros, right? And so it was like a good trade would net me like $100, and like that would be like when things really went well. And if I was just doing what I was supposed to, I was churning out $50, $40, $50 trades pretty easily. But then you'd take a stop at that time it was like a $60 stop, right? So you had to win a lot more than you lost. And there were some days where I was not performing very well, and so I didn't want to size up until I could get the consistency. And so I started to get the consistency, and then started this prop account with Apex, and realized that like this is a good opportunity to learn how to size up. And so I've been working with my coach on doing that. And now on a good day, like I said, back then a good trade would like max get me like maybe $100, $120 if I held runners, right? Because I was only trading like 3 or 4 micros, just to get the hang of it, because I didn't want to put a lot at risk of a system that I really didn't understand or didn't totally trust yet, right? And just as a trader, I didn't trust myself to like trade it right, even once because eventually I trusted the system, but I didn't trust myself to actually just trade the system. But once I realized that all I had to do is just trade the signals when they say to do it, like I was all of a sudden able to I was more confident sizing up. And so whereas a good trade might have been like $100, let's say, just to make things even, all of a sudden my losses now, a regular stop would be like $160 or something like that, right? And even though like big picture, $160 doesn't seem like a whole lot of money, like it shouldn't really tilt me, right? It's not, I mean, I have a real job, like I've got I've got a career, so it's like it's not like I can't overcome that. It has nothing to do with the actual amount. It's that psychologically in my mind it took a lot of work and a lot of time to put together the trades to be able to get like an entry and runners and all that stuff, and that would very rarely equal more than $120. And so all of a sudden when my stops were costing me $160, it was like, wait, how am I ever going to make this work? Of course, what I needed to realize was that my wins were making me 200 plus, right? Because I had doubled my size and I was trading more like 6 micros. And so that took a while to like really adjust to. Well, now I've doubled again, and so now I've been dabbling with the minis, and just trading. Well, I tried trading one mini, and that was actually really difficult because you couldn't scale in or out. Well, this could be a trade entry if you're bearish. Let's see if it sets up though. It needs to close at 19. Oh, it's 10, last 10 minutes of the day. Yeah, I shouldn't take it. But you can see how this red line comes right back in, and then if we close here, it'll come back into that area, and that area had all the volume. Ooh, but you know what? We're gonna close the bar if we're bearish one tick above that volume. Oh,
Detected at the front.
hold on, guys. Be right back, folks. Thank you. All right, Mr. Amazon. What was I saying? I was babbling about something. Talked about sizing up. Oh yeah, that it's really hard to trade one mini. Oh no, I was talking about this potential entry. So if it closes at 19, it would normally be a like an A+ short entry as long as you don't think it's bullish. But we have signs here that we're actually squeezing a little bit, so it would be questionable whether or not you want to be bearish here, because it might actually be bullish. The other problem is that all of the volume on this move down, where we're trying to trap back into, on this wave down, all the volume is at the high. Yet that high, if you put the line on it, is right under this close. So it is a valid sell. It's the end of the day, first of all, so you got to keep that in mind. There's a problem there that you would only have a couple minutes to take advantage of this trade. So the chances that it's going to go, with 8 minutes left in the day, and then like another, you can trade a little bit longer aftermarket if you really wanted to. But you got to think about what's my best case scenario, because my entry would have to go here at like 19, let's say, and my stop would have to go at like 36. So or at least 15 points higher. If you're willing to take it a second time, you could just do 15 points higher. But so to get 1-to-1 from 19, I would have to get all the way down into like back into this area here. And what are the chances that like we're going to do that in 8 or whatever's left, 8 minutes, right? The chances of that 1-to-1 trade is not so great anymore. Like it might happen, but how often will it happen? Even if this trade quote unquote works 70% of the time, when I only have 8 minutes left in the day, how often will I actually see those 15 points? Right? It's less than 100%. So your win rate taking those trades at the very end of the day will just like automatically drop, unless you also think that there's a chance that you're actually bearish and that this closes way lower. Well, if that's the case, then fucking take it, right? Like, then you're bearish and you should be taking all of these. And maybe you took this one too, and maybe you got one stop and then two winners. Like, that's fine, right? But then you're trading aggressively bearish, and if you want to do that, you can. It's just not what I'm doing currently. Yeah, it's just not the way I'm trading at the moment. It is something I would prefer to do if I was able to execute it well, but I have attempted to trade more aggressively and generally end up trading worse. So it's not that the system performs worse, right? It's that I end up making errors, and it's usually because I'm looking for so many opportunities that I end up making mental errors, or like I'm just getting fatigued, and that causes either mental errors or just like hesitation, and which I guess is a mental error too. But all of the sort of things where like you're taking trades where you shouldn't, or you're not responding to trades that you should be taking. like I just had too much. I had too many choices, you know, and so the way to if you're struggling with that, the whole reason I'm sharing this is because if you're struggling with that, what I find helps with that is actually just getting more consistent, which may mean taking less trades, right? Only take the trades that you know or feel confident work way more often than they don't. And the result of that should be, assuming they work pretty often, should be that you just have a lot more experience winning. You'll still take stops, but you'll have more experience winning and you'll have a ton of experience waiting. And waiting for the signal is probably the hardest part about trading. Once you're good at finding the signal and waiting for the signal and executing that one trade, if you master just that one setup over and over and over again, literally all you would have to do is scale up and you could make pretty much as much money as it would allow, right? Like as long as the edge like is scalable. This one definitely is because we're trading futures, which you can easily push 30 plus contracts most of the time during RTH and not like ruin your edge. With a 15-point stop on NQ, like that's not unreasonable. In fact, people in the room do way bigger size than that. I don't, but people in the room who have bigger accounts than me regularly. Like when I used to trade 3 micros, and then I upped and I'd like trade it. I'd get in and then I'd buy another 3 micros if we pulled back, right? That's the way I was taught to first add size. Is basically like so an example of it would be, let's say you got short here, right? Your stop remains right here, but you're willing to take 6 contracts, so you're going to get in 3 of them right here, and then you're going to get another 3 of them right on that, I missed it, right on that yellow line where all the volume is, or maybe a tick below. You're just going to leave your limit order there, and if you get filled, now you have twice the size, but your stop for the whole thing remains here. And so the result is you've got 6 contracts like you planned on it, right? But your risk is actually not as much had you bought or sold 6 contracts here. So when you're wrong, it's not going to quite hurt you as much, but sometimes you're going to miss that ad, right? But if you were confident and comfortable trading 3, let's say, but you wanted to trade 6, the way to start doing that, in my opinion, in my coach's opinion, and from my experience, it worked really well, is to add on that little pullback, and then you actually can take profit earlier now. So if you were planning on taking profit at the voodoo range level at 1207.75, I can now take 3 of my contracts out right here because it came from back here, right? So if I wanted 10 points, like from this point, like now I can take 10 points from this point. So that second set of 3 gets peeled off at 10 points, and then that other half, I can actually hold longer if I want to, right? Now, I didn't short this because I didn't think it looks bearish. I admit that I didn't see that, like I thought about the fact that we could bounce here significantly, but I didn't really think we'd close higher than yesterday's low compared to on NQ. I didn't expect that, but it doesn't, you never know. Right? Like I did mention, I can show you here. So in the room, we have a room, right? The trade and perform room. And when we were talking about what's going to happen, or what we expected, let me see if I can find it. Not finding it. Hold on. Wait for it plus setup. So I had the long. Slow B. Okay, here. Is it here? So I said, if they try to bleed into that low, right, it will probably trap back in, at least, right? And so that was at 9:56 a.m. Pacific time, right? And this is in Eastern, so that's 11, 10, 11, 12:56. So we were, oops, that's the wrong chart. So we were 12, 30. We were here, right? And we were discussing whether or not we thought this was going to break. See how close it was? Right? And in the room, one of the members in the room said, it looks pretty, so I said, I don't, okay. He said, it looks pretty damn bearish to me. The down waves since yesterday are huge. Plus, these overnight lows are not that far away. And, you know, because we were in here, right? And the overnight lows were right here on NQ. And so I said, I would agree if they pick up speed. And he said, someone said, the problem with yesterday and today is speed has been very sporadic, right? It's been difficult to catch trades correctly. And so then I said, if they try to bleed into that low, it will probably trap back at least. And then we had, we had agreement there. And so what you saw is they got under the low, right? They went a little further, and then what did they do? They trapped back into the low. So it does make sense, and it wasn't like a huge surprise that they trapped back in. It shouldn't have been. How did I know they might trap back into the low? Number one, speed was very slow in here, right? We had a big drop here at the market open, and then speed settled down here, and you can see that we had big volume up here, right? And then naturally, as we got this retrace, volume decreased. So this green volume decreasing made a ton of sense to me if it's bearish, right? It retraces, volume's going lower. We come right back into this high volume node I identified from way back in June, right here. We reject off of it, right? Just like because we found support on it yesterday. And so we reject off of yesterday's low. Sorry, yesterday's regular trading hour low, right here. We rejected off of that and went for the Globex low. And we were right here at this voodoo range level, hanging out in here. And what I was thinking is that what we were talking about in the room is that speed has degraded. The speed of movement and the rotations, which I'll show you on the algo, have degraded so significantly here that while the low is vulnerable, if they take it and they bleed through it rather than rush through it and find like increased momentum and speed there, the result, I said, would probably be a trap back in or a return to today's range, right? And so what you saw was starting here is where the here, we'll draw a real line. How's that sound? We'll draw a real line. So the low on NQ was there. Let's make it a different color because I got lots of red ones already. So let's make it green because it's a low. And I'm a mean reversion trader, so I like my colors that way. So as we approached that, notice volume was actually decreasing. See that? Decreasing. And it was actually below average here. Below average volume. That's what this shaded area is, just average volume. Over the last, I think it's 10, maybe 20 bars. But it's basically average volume, despite the fact that we're approaching all this liquidity, right? So what I said made sense was there's liquidity down here. We're probably, we could go get it, right? I wasn't sure if we would get it on ES, and we didn't, but we could go get this. And then if we did, but we didn't have any speed associated with it, that we'd probably trap back in. And so when we finally took it, you can see that while volume increased from this, right, it was nothing like this. There was no increase in like selling momentum. So like when it's going to continue, you got like, let's look at buyers, right? Buyers show up a little bit here. they go lower, lots of buyers show up. What happens when we break over that? Even more buyers show up, right? Those are the moves that can continue. The ones that, whoops, oh man, I moved that. That sucks. Not sure how, there we go, okay. So, it should be locked. But the move today in the inverse, we had sellers up here at the highs, yesterday's close, right? A good amount, right? And then an increase in volume here at market open. Totally makes sense. Which took out this one. See that? So we went through this level, we retested it, and then reversed. That part is bearish. There's no question about it. That whole action is bearish. Getting underneath the volume node, high volume node, retesting it from above and reversing is like that's our A+ setup, basically. There's nothing more consistent than that. As long as you have the direction right. So in this case, the high went into this high volume node that was developed months ago, and then we rolled over, right? But as we rolled over, volume and speed did not increase. Look at how long this took. These are 30-minute charts, right? From the time that as we approach this green, this here, you know what? It's even more. It'll be more obvious on the smaller. Hold on. So look how it was like chop, 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 release, right? Got through it, retested it, broke down. But these are 5-minute candles, right? 5, 10, 15, 20. 25 minutes just to get from breaking the low to another extension, right? We broke the low, we retraced, and we got another extension. It took, like I said, this was the break, right? So we have 5, 10, 15, 20. It wasn't until 20 to 25 minutes before we got another extension. And this extension here, this one, this low, look at the volume, how it's way less than when we actually broke the low. Previous day's low, right? They hit the stops, they collected liquidity, they found no interest from sellers to sell down there. So what happened? 5, 10, 15, 20 to 25 or 30 minutes sitting in this area, right? And so now they've confirmed that price. Someone's interested there, right? It's spent time there. It's not fair pricing. Someone's interested. They're negotiating it, right? And then what do? They pull back into the midpoint of this move and they bounce, right? Makes sense. It's almost like an inverse head and shoulders. I mean, it is, right? So if you're trading candlesticks and not the algo, once you make a new low, which happens here, right? You can find the volume that's in that low. And if we wanted to do the higher time frame, it would be this, right? We looked at the 15-minute chart. That's what it would look like. And what you'll see is in both cases, the high volume hit right on the voodoo range level or near it. And that's usually how things work, right? And even though I give these levels a week in advance, not every single one of them is going to be a high volume node, but the high volume nodes that matter are going to be on them, right? We don't know which one exactly is going to be the one, but you can extrapolate just by looking at where the low was, right? It's probably going to be this one or maybe this one, if you're going to get a bounce, if not the midpoint between them, which actually was the low. If you look, that draw, right? 25 to, whoops, coordinates. 29.25 to 50.75. Draw it carefully. And if you look where the actual low was, it was in this target zone. 50 to 61.8. Right? Between the two. That makes a lot of sense. Or it should. If you've seen my video, it should make sense. Or if you've been watching these at all. So now what we can do after we draw that low is we can say, look, if this is the low, what's going to happen is wherever all the volume was, which we can just call the voodoo range for now, let's say, We need to get volume above it, and then we need to hold it and bounce. Well, they tried it here, and they got a little bounce, like enough to scalp, but they ran into the low. See that? The green line, which again was the low from yesterday on NQ. They ran into that low, and they reversed. I will show you this on the algo, because it set up, and it reversed, right? There was a good setup there. Then it went back to this volume area low of this bigger drop. Went back there. It tried to trade below it and rejected. And then what did it do? It got volume back above this high volume node here, right? Which we're calling just the voodoo range level, but it's technically this, right? The high volume node of that move to the low. Once we've gotten over it and test it and bounce, things are good, right? So here though, we got under it. They couldn't, sellers didn't reject it. We got over it. We retraced into it and bounced. There's your long. That's set up on the elbow too. And then the interesting thing to me is that everybody focuses on this low now, and they start shorting at every, not people in the room, but like retail traders. Like they just assume because it's bearish that we're going to keep going down. And so they ignore all of the like order flow, and they just look at it like every chance I get to get over a high, I'm going to roll it over because I know I'm going down. I know it's bearish, right? They draw trend lines. They find all sorts of excuses for selling this and selling this and selling this, right? And like literally those are the worst places to sell if it's bear, if it's bullish. The worst, right? They would work wonderfully if you're in a balanced situation, right? So on a higher time frame where it's balance in this zone, I thought it was balance. You'll see it on the 2 hour. On the higher time frame, this whole range to me looks like expanding balance. The range is expanding, but we're not really, no one's got the momentum on their side completely. They're like passing it back and forth, right? So let me get rid of some of this. So what ends up happening is your best trades now are short over the highs, buy under the lows. That's like bread and butter for this kind of trading. The problem is like I said, when things start going in one direction, it'll only work if you're trading it in that direction. Like if you can get under this low, it'll work. You just won't get it set up. If you can get under this low, it'll work. It just won't set up, right? So you'd have to go down to a really tiny time frame, like on the algo, and find like this low getting taken out, this low getting taken out, this low getting taken out, this low, right? That's how you would have, if your strategy is just buy dips when it's aggressive, which is fine. You just need to know, like, should I be one directional or bi-directional? All right, let me take a quick break, you guys, and I will come back and we will do the review for the day, okay? I will leave you with some tunes. And like I said, I will be right back. tunes, and we're back. All right, so saw the close. We talked a little bit about why, just from the candlestick chart, we could have seen the fact that this low potentially had some excess on NQ, and why we might have been looking for the bounce. So now what we're going to do is we're actually going to go back and see if we could find it with the algo, which is way more important, right? It's one thing to be able to say, like, oh, it might be bullish if we can get underneath this and go back up. Like, but are you going to be able to manage risk appropriately? Do you know where to exit your trade? Where's exactly your entry and stop, right? And then would you be prepared to take it considering what was happening right before that? Because what I've experienced, and keep in mind, I've been using this, at least the trade and perform algo. I've been working on this for a little more than a year now, which is a long time. I'm a slow learner. But I still will find if I get stopped a bunch in a row, like if I have like 3 stops in a row, I am very, what's the word? Like it's quite probable that I will then make a mental error if I keep trading without taking a break. It's like, I'm not even going to say I'm at risk. Like, it's probably going to happen. And so even though with the algo I am told where to get in and out, I will still make mistakes, and that's just the way it goes. So let's move both of these back. I had a request to share not just my algo with the extra stuff, but also to show the trade and perform algo, because a lot of people who watch my videos are also members in the room, which is great. And so they were asking, like, hey, that's cool that you made all these extra signals, but what if I just have the regular algo? Like, what can I find then? And the truth is, you can find almost every single one of the trades still, right? Definitely all the best trades are from these signals, so we could do it straight from here. The added benefit of mine for me is that I have more information to interpret, and I'm also looking for opportunities where there might be a trade set up that I don't know yet, that's like becoming more clear, and if I'm not watching those, I won't know what to look for, because I'm not using like AI or anything to figure out which trades are working and which trades aren't. I'm manually going through with a spreadsheet, like day by day, like deciding, like, did it work, did it not work? Here, I'll show you. So like, and that's it's the long way to do it, but the cool thing is it means that I can it means that, yeah, I'll show you. So it looks like this. Just pull up a random one. So it looks like this, right? Yeah, so by doing that, I can then know when things are working and when they're not working, and I can not leak profits if they stop working, and I can find the adjustment as quickly as possible with help from the team to figure out what I should be doing to like, if a setup is not working as often as it used to be, right? So I've got some of these extra things on here, like some of the colors are added, and there's a couple extra signals, and then like I've got these indicators down here which are actually just for identifying where in the rotation we are on multiple different time frames. So let's go back to overnight. I did an overnight live session in London, so I'm not gonna. I've already reviewed this in there, but I just want to kind of quickly show you what happened. Is that we closed. We had this drop at close, and that continued. And so what I here, I'll show you this real quick. Is we had this set up, and we said that if we could get the short to line up to one of these levels of high volume, that would be ideal, is what I said. And so you can erase those. So now if we just look at these gray boxes, what we'd be looking for is signs of aggression that come through, that get retests from below and roll over there. Now you can see this was a aggressive setup, but a valid setup, and this is aggressive setup, but a valid setup if it's bearish. So both of these did not qualify for my conservative method that I'm currently using, but they do qualify for the more aggressive. If I turn up the aggression, those are basically the next two trades that get added. There might be one other one that gets added first, but one of the trades, two of the trades that get added would be just taking a short on those. But this one just did not set up. If this had a star, or if it was orange like this, and see how it contacted, or this one, see how it contacted this gray shaded area, that would have been a short there, right? But then we get another opportunity down here, so we need to develop volume below, and then retest from below. So that's the first scalp. Now the star that's on the bottom one, this is just a scalp. So if they'll usually come back, yeah. See, so the star itself, because of where it is on the channel here, it's on the lower end of the channel, not up here. So this is just a scalp. And then what we want to see is we want to see them reject. Now this one didn't get algo, but if that would have been orange or star, this one would be the better one. Because see, the problem with, we didn't develop any volume down here first before the retrace, and we're not in the right location. Whereas up here, we're at least above the midpoint, but here we're like literally at the bottom, right? We're at the wrong side. So usually they're going to trade above this. The one possible trade here is if this gets a power bar, one of these little flags, and then we get this bar, then this is an entry. This one just did not get a power bar, and that's just what happens when you trade with an algo. Sometimes it doesn't quite meet the criteria. So even though I could look at this and say like if I'm just looking at it from this point of view, like I know this system well enough that I can say like, yeah, that's probably going to work. But I don't have the signal here, and I don't have the flag here, which is the extension line. So I technically couldn't take this, right? And I didn't, because I follow the rules. So what they ended up doing is bouncing with another signal here, and then rejecting. So here's my first valid short. See how it bounced off of this? And the primary target is like 15 points, 10 to 15 points, let's say 12. And then any runners beyond that is just gravy, right? So if you can push 30 points or more, cool. You can see they got underneath the voodoo range level, and then we got a signal that they're probably going to try for a retrace. And that retrace reaches back up into the higher. Remember, this one here was a valid signal, right? This one here is a valid signal, and this one here is also a short, because it's still interacting with the same level, and we've been developing volume below. So that is a valid short, and it's in the right spot too. See how it's on the top of this blue channel, above the midpoint, even above this like very faded dotted line. These are actually quartiles. There's a top quartile, top mid, top bottom, top low, and then what's it called? The lowest low, right? 1, 2, 3, 4 quartiles, and then there's above the channel and below the channel. My long entries are going to be best when they're below the channel, and good as long as they interact with this lower quartile, so below this purple line. And my shorts are going to be best if they come from up here, above the channel, but good as long as they're interacting with the upper quartile above this red line. So this is where I want to be taking shorts, not here, where it's at the bottom. The tricky part is that the actual price is the same. It's just the timing, right? This price, and this price, and this price, and this price, it's all the same price. So having a level there is not good enough, right? That's just not good enough to trade futures. If you're going to trade options, you can just get short here and put your stop up here, and you're good, right? With futures, I need a 15-point stop or so on NQ, and no more than a 4-point stop on ES. So yeah, like that's maybe 5 at max, but if it's really volatile. But to do that, it means I got to get my timing like perfect, right? But the cool thing is the market does give you opportunities, multiple opportunities to take that short, because every time they are actually sweeping stops from people who got short earlier, right? So it's actually a great opportunity to add to your trade or to catch it if you missed it the first time. But that's why we use the algo, so we know when that time is. So then we see this drop, get underneath the channel. Note that the channel starts to turn down, and I start to get lots of purple bars in the background. These purple bars were a sign of bearishness too, right? Which would have helped me take this trade because I'm trying to get bearish there. When they're there and they disappear underneath the channel, and the channel is flat, it's usually a sign that we can get a mean reversion trade. In this case, the channel is not flat, so this is a little bit aggressive to take a buy here, all by itself. But then when it turns purple at the bottom of the channel, see how we are actually under, in both of these cases, we are under the channel, right? Whereas here we were inside or above. Huge difference, right? Here we're under the channel, right? When you're under the channel and the purple goes away, right there, the chances that we're going to get some sort of a retrace increase as long as momentum isn't increasing. So a good question to ask is, how do you know if momentum is increasing? Well, there's a lot of ways, right? But the way I do it is, first of all, I look at cumulative volume. And so these gray dashes, or bars, are the cumulative volume from bar to bar. These are the volume bar range ratio, right? So what I'm basically looking for is, I want to see, if I'm looking for a reversal, I need to see a down wave and end, the purple go away, and in addition, I need less volume to have accumulated at this lower low, right? It needs to be a divergent wave. And in addition, I need this one that came before it to be bigger than the last two green waves. And I need this one to be bigger than the last two gray waves. So in this case, this is one wave, this is two waves. So this is my biggest wave. That's good. This one is my biggest wave compared to this one. The two bars don't count, they need three, and it's bigger than this one. So all of that criteria is met here. And so normally, without any more information, if I was just using Simon's here, is it, where am I? 459. Okay, if I was just using Simon's, like I said, I promised I would try to do some of this in both. If I was just using Simon's, what? Am I on the wrong day? No. Oh, 0.45. I just freaking read it wrong. Okay. I thought it kind of looked wrong. Okay, 0.45. So right here. Okay, so if I'm just looking at Simon's, I still have these, right? And I can clearly see that this wave down had way more volume than this wave down. That's quite clear. Then I can look and ask, well, where was that volume, right? Well, it was way at the high. Well, that's interesting, because that means that the magnet for price is going to be to come up and test that. It doesn't mean it's going to do it. It's going to try. It's probably going to try. And so just by that, I could say, if I get a setup here, that's a high odds setup, I could probably take a long and target back up into this area, right? Now, this time it didn't work, right? Which is just the way it goes. Like, sometimes it's going to look like the trend is losing momentum, and it just gets more momentum, right? But with my algo, because I get frustrated when that happens, what I've done is I've added these purple backgrounds here. And so what you'll see is when there's more purple in the current wave than there were in the previous wave, there's a good chance that you're actually increasing in momentum, as long as you're also making lower lows, right? And then the opposite would also be true for bull trends. But what usually happens in a bull trend is you have 2 bars or 1 bar, then you make a retracement, then you go lower and you get 3 or 4 bars, and you make a retracement, then you go lower and you make 4, 5, 6 bars that are purple background, right? Momentum increases is what that's basically telling me. What you can see here is when you have, so here, 1, 2, 3, 4 bars of momentum, right? We get a retracement. 1, 2, 3 bars of momentum. These bars did not get underneath the channel, so there's no buy here, but there's a sign that momentum is going down a little bit, right? We're slowing, that momentum is like dying off, but there's no trade here because it's not in the right spot. Then they finally get under the channel, and we only have 1, 2 bars that are purple, whereas this one had 3 and this one had 4. Guess what? This is a much better scalp to take a mean reversion trade, and you can usually target the midpoint and potentially get to the top of the channel, if not back to the high volume node from the drop, which was identified from here. If you remember, we drew this big wave, right, and identified that level. Okay, so I can do the same exact thing here. I'll even do it on this one. I can do the exact same thing here, right? I just don't have the purple to show me, but if I wanted to, we know that that one goes there, so we can draw same thing, DVP here. We get that level here, oops, where we'd like to get short, right? Which means that there's a relatively good chance that anything under here while they're developing volume is actually balance. So eventually they're going to break through this, right? And they do break through it. Okay, well now if I have a reason to think that there's less momentum in this wave compared to this one, which, like I said, I have on my algo, because I've only got the 3 and then the 2, right? It gets lower and lower. So once I see that, what you'll get is a retrace back up to resistance, at least the top of the channel. His colors are different, but and then often back to the level. And this one was almost precise, right? Then we drew it again, but just you can see that it literally hit that target to the tick, right? And then retraced. So it's not a reversal as in like a trend reversal. It's a mean reversion trade. It's to get price to turn around for the time being, and it's going to do that a lot, way more often than a breakout works, right? Way more often. And so when it's far enough away, when the target's far enough away from price, it's like, in other words, not here. See, this did work, quote unquote work. The problem is that we were only a few points away from the target because price wasn't under the channel. And that's why we use the channel. This looks like a good trade. It's got the algos on it, right? It should be a long, and it is, as long as your target is far enough away. Here, you just don't have you don't have very good risk reward, but it does hit the target in reverse. It does exactly what it's supposed to do, right? But it turns out this is actually a better sell. And it's very hard for most people to flip back and forth between I want to be a buyer and I want to be a seller. But the truth is that if you saw this and saw there was resistance here, not only is this like quote unquote valid signal probably just not a good idea at the moment, but once it actually hits the target that isn't very far away, if it rejects, this is actually a great short. And yet on Simon's algo, there's no indication of that. It just looks like any other bar, right? So this is one of the reasons why I added some of these signals, is here it's not a naked bar. It shows the trapped trader at the top, which is the red background, meaning that there's a buyer at an important level up here. And then it also has this diamond, which indicates like a sudden interest. It's not really aggression, but it's like if they weren't interested over here, and now they are. So that only helps me if it occurs at a support or resistance, and in this case it was at a resistance, right? So it's saying that the last time we were here versus the time now, we actually have more interest now, and so there's a good chance that whatever happened here happens again. That's what that tells me. but it's proprietary. I'm not going to tell you how to do that, but it's order flow. It's just looking at the time and sales and the footprint and all the information from the order flow, and then I'm just telling you what to look for, right? So anyway, this got lower and lower. I was going to show you this guy. So if you wanted to see another way to find this, where's the high? This is the high, right, of this rotation. Okay, so we have a level here that you, and then you have the low. You have a level there. Okay. So those are two more, or we could just call high volume nodes, right? And so what I can do, since they're relatively close, is I can draw them like this, and then just get rid of the volume profiles because the rest of it doesn't really matter. And I can basically say, look, that's where all the volume went off during this wave down. I know from my algo that momentum is decreasing even though we're going lower in price. I would know that right here. And so now I'd have to ask myself, do I have a target that gives me good risk reward, right? Well, it could get here all the way back up to this support, but that support has been tested over and over and over again, and we've already broken down, that resistance, I mean, has been tested over and over again, and we've already broken down underneath the relative support that was causing those bounces. So what probably will happen is this support will now become new resistance, right? So that's just the way markets usually work. So I would expect, if I saw any sign of aggression to the sell side here, I would just exit. In this case, they literally just pushed it all the way through without even trying to sell it, which is interesting, right? But it does get to this initial target, to the tick again, right? To the tick. But now, what we would have had to see for this to be bullish, we'd have to see them come down here and bounce. Well, they didn't do that. They got aggression, that's the stars, to the downside. Well, guess what? We've gotten some volume underneath. We've identified that there was a bearish trend at one point, and now we've gotten underneath that volume build after trapping buyers at old resistance, and they're doing it with aggression. Guess what? Purple bar, star, see ya, right? It's going to give you another entry there. And as long as you're bearish and you've rejected at resistance, you can take these even though they're a little bit out of position, in my opinion. They're in the center of the channel, because you're basically playing for this low. I don't know if we're going to stay under that low. That would depend on how much volume we get here and how fast we do it. But my primary target is to just test or break this low slightly, right? And then what we do after that, I will determine based on what the algo tells me. But the cool thing, so on this one, you might have seen purple bar star again, or purple bar green bar, and as long as it's not super bearish, this is usually a pretty good buy to get me back up to the channel. Well, in this case, it does get you back to the channel, and then it just reverses. Well, you could have measured how far your resistance was and seen that it's not enough, just barely, not enough to really take this risk. And so you might have skipped that trade. That's one way you could have avoided the stop, because it does eventually stop out. The other way to avoid that stop, you're not going to avoid all of them. There will be times when I stop. The other way to avoid that stop is I see that we had 1, 2, 3. We made a lower low. We had 1, 2. We got a retracement. Now we made another lower low, and guess what? 1, 2, 3. 3 bars with purple background. What does that mean? Momentum's increasing, right? So even though we had less volume, and you'd think we're probably going to get some kind of a bounce, where? Probably to old support. Where's old support? Right here, right? And it's just not very far away. But the question that most people ask is, do I have a chance to bring it right back up to this resistance again? And the answer might be obvious that you don't right away. It'll eventually get there probably. But if you don't see it, what you can do is you can treat this, you can do the same thing we've been doing and figure out where all the volume is. I think this is where I started talking about this, is the volume here is on the high. Right? there. That's where all the volume is on that drop. So it had less volume, and all the volume is up here. What was happening up here? We were balancing, and buyers were trying to take back this level, right? We have a big old red outline candle and this star here telling us that there's a good chance that anybody who bought up there is totally trapped. So should we expect price to come right back up there? No, probably not. Could it bounce? Yes, it could bounce. And it could eventually get up there, but it's probably going to at least need to chop around for a while and give me a better signal to get back up there before I'm interested in getting up there. Anyway, that's how I think about that. You can see that bearish momentum continued to increase as we dropped. There's really nothing to do here unless you want to short in the hole, which I don't. And then we get 1, 2, 3, 4, and then a break, and then 1, 2, 3, and then a break, and then 1. Right? Are we below the channel? Yes. Do we have risk reward to get us back to the channel? I'd say we do, because our stop goes down here, our entry would be here, and our target would probably be the purple line, or maybe if you want to be conservative, the blue line or this point of control of this bar here, because that's about where the channel would be by the time I get there. That's my target. I don't just expect this entire thing to reverse, and if I don't know if I'm sure about that, I would just measure the down wave. And I'd see that once again all the volume's at the top, right? So eventually they're going to come back and clean this up. They're going to fill this in, right? Can they do it right now? Probably not. They've got all this momentum to work through, and they've got all these trapped buyers that aggressively bought this up here, right? So what's probably going to happen? They're going to have to, once again, renegotiate, balance, trap a seller, and then try to bounce. And so the market makes a lot more sense to most people if you think about it from only one direction first. It's a hell of a lot harder to interpret the market back and forth, like, is it a sell or is it a buy? But if you're only thinking, is it a buy or is it not a buy? Like just binary like that? Because sometimes it's not a buy and it's not a sell. It's never a sell and a buy, but sometimes it's neither, right? At least in a certain situation or a certain location. But if you look at the market as like, okay, I know already we're bearish, right? And even with just Simon signals, you could probably see at this point that everything's pointing down. All of these trades that look aggressive on the bull side are getting immediately beat. There's no real great reason just to like start knife catching this and expecting it to come back up to the highs. You just have to know that that just doesn't happen very often, right? You don't get heavy momentum that just like immediately reverses very often. But can it happen? Yes, but it doesn't happen very often. Oh, hold on real quick. I just got to answer a quick message. All right, sorry. All right. So, yeah, if you didn't know we were bearish here, you probably know now, right? That you're getting pretty bearish. But you can see that we get underneath the channel here. See, the way these channels are supposed to work is during balance, most of the volume is going to go off in the channel. And rarely you'll get beyond it, and then usually you'll come back to it. It acts as a magnet. So when you stop doing that, now if you just stop doing it for a minute like this, what you usually get is a ricochet back to the top. That's just a range expansion is all that is. You can see this on the zigzag pretty easily. You got out of the channel here, they're going to come right back and get on the other side of the channel here. Does that mean it's bullish? No. And that's where people get fucked up with mean reversion trading. They start thinking about it like momentum trading. It doesn't work that way. It's a different strategy. It's totally different. With a momentum strategy, you're usually looking for higher lows and breakouts, right? Well, in this case, we're just looking to get back to the mean reversion, right? We want to see price get back in to the middle. Mean means average or middle, and that's average, but it's middle of this ATR channel is where we expect most of the volume to go off, right? So if we're traveling underneath here and we start pulling back in, like, yeah, we're probably going to get back to the channel. And if we get back into the channel, we're either going to go to the midpoint or we're going to expand range, but we're going to run out of steam, most likely, when we exit the channel. So, or at least when we test it. So it should make sense that that's kind of the way that that market works. But you can see that once we get under it here, and in addition to getting under it, we also stay under it or reject it on a pullback like that. This action here, especially with an aggressive algo signal, that is a sign to hold off on, to decrease your bullishness. You can still buy when the risk reward back to the channel is good, but you should no longer, if you thought you were going to break this high, just stop thinking about breaking highs, right? If you were swing trading long, you should be getting out of your position here. I would anyway, because if you were bullish before this, you're not anymore. And so now you can see that most of the volume is outside of the channel, right? And so your only opportunity to buy, you could sell some of this. I'm not saying you can't, but if, like I said, it's easier to explain these things from one point of view and then just apply the inverse to the exact opposite situation. But in this case, if you insisted on being a buyer here, your first opportunity to buy is this purple bar star pattern, which does work a lot, but not every time, right? Here, it actually technically worked. It did get a lift back to our target. And the only mistake people make is they make their target up here, and it's just not realistic because you've put so much volume underneath the channel, and the channel is already dropping. So it's bearish. So you're not going to get most of your volume in the middle. You're going to get most of your volume either at the lower quartile or else under, right? So as long as your target is here and you are risk-free right there, right? So like, let's say I took 6 contracts here, right? If I took, here, I'll do it with numbers. If I took 6 contracts, when that closed, my stop goes here. So I'm in at, let's say 36, let's say 36.50, just to be fair, right? Because maybe you got a little slippage. And then I'll say that my stop is 22.50. Right? So it's like a 14-point stop. And so 60+% of the time, you're going to reach this downstairs of, if this is upstairs of the channel, this is downstairs, right? You're going to meet this downstairs area often, like significantly more than 50% of the time. So my most aggressive first sell, notice I said first, I'm not selling it all, would be right at that purple line. So let's say about 54.50. Right? So, I mean, that's a good trade to me. Like, that's, the risk reward is good enough, right? It's not 20 points. It's not a huge difference, but it's close enough that as long as it works, if this works let's say 60% of the time, shit, even if this worked 50% of the time, it's still a trade I should be taking. As long as I have this kind of risk reward, because I'm getting essentially 1-to-1. And so I should be taking that trade as long as it works more than half the time, you know, because I'm risking, like, if 50% of the time I fail and 50% of the time I win, all it needs to do is technically like 51, 52% of the time, and it's a trade I should be taking very often. The back tests show me that this is significantly higher than 50% of the time. So there's really no question, if I want to be an aggressive trader, this is the first opportunity to take that scalp. Now, the nice thing is in addition to getting that target, 60, let's say, percent of the time, it's a little bit more than that. Let's say 60, or at least it has been. Obviously, past performance is not indicative of future results, etc. But in the past, it's gotten to here like 60% of the time or more. The nice thing is that by taking 6 contracts here, I could actually take 3 off, and then if I retrace the whole thing and it stops out, I'm just break even on the trade. I don't even lose anything, right? Because I won like 15 and I lost 14 or whatever it is. What did you say? 15? Yeah. So I mean it's close enough, like 14 to 15 points. So I'm just about break even, almost break even. And now any time that it goes upstairs or more, and I get runners to pay me is just gravy, right? Now a lot of the times it won't go higher than that. Sometimes it will, right? So I'd be out of all my contracts here. As soon as I started to see this struggling, I would be out of at least one of them. It's not wrong to hold for the. We know that there's liquidity up here. It's not wrong to hold one of them. It's really not. But when I traded this overnight with you guys, I was live, I believe, for this. Oh, maybe it wasn't yet. But I had a similar situation where I took all my profits a little bit early. Might not have been this one, but yeah, I will often, if I'm trading full size, let's say it that way, I will just get out of the market here because unless I have a reason to think that I'm bullish, and sometimes you're bullish, and if that's the case, then hold a runner, see if you're right. But most of the time, this is going to be like you're going to give back your gains if you start to struggle here, unless momentum is bullish, right? And I don't have any way to see that it is here, right? I don't have any evidence, to see that it is. If you look just from Simon's, if you look at the waves on the volume, accumulated volume, there's way more interest in selling this market than there is in buying it, right? Like hopefully you can see that. But the sellers are doing all the work, right? And a lot of the buying is just profit taking, basically. And then if you still weren't sure, you can always see where the volume was. And when it's at the top like this and it's bearish, these guys are trapped. They're totally trapped. So the idea that you're going to get above him is not realistic. And the truth is, actually, this guy's trapped too. Right? See how this volume also touches this range? So really, that's probably your highest target. And if you look, that's pretty much exactly where we get. Right? So if you just took the time to find the trap trader, you would know with a pretty strong conviction that my primary target is somewhere near this, right? And if you remember, I mentioned when we saw this that I know that purple bar followed by star or purple bar followed by a green bar, that is commonly a buy signal. It is a sign of aggression. It's just only a buy signal if you have risk reward, right? So if I think that that's a sign that people are going to buy, here you didn't have any risk reward because the target's right here, right? But if I thought this is a time that I might be considering buying when I see this kind of order flow, you think other people might be buying that too? Hell yeah, they are. Well, if they bought that, what do you think they're going to do when their trade doesn't work and then it comes back and gives them an opportunity to get out there? Like, let's say they didn't take their like, you should be stopping out, right? But let's say you decided to hold it and it goes all the way down and then it comes back up to your original stop. The good traders who don't use a stop will get out of this right here, right? The good traders who use a stop don't have to worry about it and they can sell it, they can short it, because pink bar star is the exact inverse of purple bar star. So the exact same order flow that told you that aggressive buyers are trying to lift it here but had no risk reward because they had no momentum, that exact same information, just in the inverse, occurred here at the right side, at the correct side of the channel and with momentum, right? So this short becomes a much better short than this long. And you can now target one of these lows, right? So you're basically taking that trade in reverse right there. So I'm out of most of my contracts right there. If I got short here, I'm going to be out the majority here, right? So if I took 8, let's say, I might come out 5 or 6 once I venture under this. Because remember, this was also purple bar star. These patterns just repeat over and over again. It's hard to make it easier. Is it or simpler? It's not easy, but it is pretty simple. But once we trade under this, what's going to happen? Eventually, they're probably going to come back here, right? They might. So if you do get under it and you get a chance to actually take profits, you might as well. Because when they come back up, they're going to renegotiate this, right? So I'm not looking at another screen. I just knew that when I get to these lows, I should probably take profits. On my algo that I watch, I have these lines drawn to tell me that, right? I know there's a lot of them, but I'm only looking at where we are right now. So when I see this pink bar star, here, let me erase all this. Too many lines. When I see pink bar followed by star, having a diamond just helps. It basically means that if this is already an identified resistance, that even if without the star, I can take it. I can take the short. But I right away can see that I've got what we call virgin pivots or power bars down here, right? Are they just going to run through all of them? No. But when they're clustered like this, like magic things can happen. When they're separate like this, see how these two, so look, when they're clustered, you get, what's it called? Capitulation a lot of times. Or they grab one of them and then they try to bounce and then they roll over. When, like that would be for this one, right? So I'd have to watch that very closely if they broke through it to see if they increase volume as they break through it, or like in capitulation, for instance, in which case I would take profits. Or if they take a little bit and then start to bounce, but they leave like 2 behind, I could actually hold the runner because it's probably going to roll. But these, when they're, see, these don't look very far apart, but if you count the bars, like this bar, the top of the bar is here. And so you can see that this one is basically 1 bar above this one, right? So it would be reasonable that they come down, break this one, and then bounce. That does happen, right? But when they're like this, that's probably not going to happen. So you don't really have to worry about that first one. You can just treat it like this one too. You can just focus on the bottom one. But look, notice up here, these two were far enough away that they took one of them and they found a buyer before this one. But I'd still hold the short because it's going to roll and hit it most of the time once it gets that retrace back to the channel. That's normal, right? But what I was saying is that if I took this short, I'm already looking down here to take most of my profits. And so by the time I get through both of these, when I thought that they could have bounced, and I'd have to take my, whatever, 6 of 8 there as soon as they bounced back into the, you know, if they haven't gotten out of the channel, right, and they tried to bounce right away, so like this bar wouldn't have printed here, it would have had a wick here, and it would have closed up here, I'm out of my core. I'll hold the runners, but I'm out of my core. I'm not going to let that come back on me. But when they continue bearish and they break the next one, and I look down here and I've got another area with nothing, no targets, no liquidity really, and I'm basically sucking this up right now, right? As long as volume is increasing, I'm going to go ahead and take most of my profits right there, because I know that the next time it bounces, it's probably going to come back to here anyway. So I might as well take the profits, like anywhere under this. So this bar, or this bar, any of these are fine to take profits. I'd probably go ahead and do it as soon as this one closed bearish, right? So I'd be getting out there, and then I'd hold the 2 runners in case we do take out another set, and then those runners come out as soon as that happens, or as soon as this happens, I'd be out. Now, if you wanted to be, if you really thought, the only reason I'd be out is because if you look at this, this has already come down a lot. See that? Like, it's come down a lot already. Doesn't mean it can't go down lower, but it could easily balance in this area. And now it's London open. So I don't think I could have held through another one. Doesn't mean they can't get it. They do keep going, right? And they keep going. But I'm like, yeah, I'm not usually catching the entire thing. I'm very happy shorting this and then getting, as long as I get most of my profits off here, I'm okay taking runners as we drop. I do not have to be the last one out. I don't care really if I get it here, 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 or here. It does not matter to me as long as I profit. It'd be nice to be able to hold runners longer, but it's pretty hard to do. You'd really need to be patient because, well, in this case it didn't take very long, so maybe it would have been okay. But usually in Globex, this kind of a move takes forever, right? What you don't want to do is just randomly buy these up bars. You don't want to just randomly buy these because we've still got momentum increasing to the downside, or at least not decreasing, and we're not inside the channel at all, let alone on the top of it, right? We have not gotten up here to identify that things are settling down. So the only reason you could buy this is if you have risk reward back to the channel, which you don't. It does come back to the channel, but it doesn't make you enough money, right? So I just ignore them. All right, now you can see here, whoops. I would not have known to buy this unless I was just buying off the voodoo range level, which I don't do. But when I see them bounce off the voodoo range level that I've been watching since last Saturday, once I see that and I see them do it with aggression, which is what most of these little signals and symbols mean, right? Now I'm all of a sudden interested to see if buyers can hold this. I'm not going to buy it. Like, I don't have to be first, right? But I already had a location there on the chart. And so once I see them defend this, all of a sudden I'm thinking, you know what? This might actually bounce, right? I just have to wait for the signal to get it. And so I can't take it right away. I'd have to wait for the retrace to see them defend that level. And so this one would be okay. This one didn't quite reach it, but if I took this one, I'd have to take it again when it did it again, right? But this is the better entry than this one, because if you took this one, like, unless you're waiting for the location, how do you know not to take like this? You know, really your target, if you took this, is back into the channel. That's not a very good target. I mean, it's a fine target. It's going to work, but you're not getting very good risk reward, right? But when they try to come back in and they bounce again, and now we're not under the target anymore. We've rejected that level, right? And now we're bouncing, and I've got a sign of aggression, these diamonds. Well, now I can start thinking about longs, right? Like, I guess I was thinking about longs here. I can actually take it here. And then that's how you catch like this first. Now you'd miss this, but catch at least this, right? And then maybe get your runners to come up here. And then if you miss it, you'd have to wait. Well, here's what you do when you miss it. You can do this if you don't miss it too. Once I should talk about me, it's my system. Once I see this, right, especially when it's at my level, I've got some capitulation here. See how volume like spiked into the low, right? So I can right away draw the volume profile and find that the majority of the volume was at the low of this candle. That base, even if I didn't have the voodoo range here, I had nothing, no levels whatsoever. I had no idea where we are in a chart. If I just had to pick a spot to buy, what I'd want to see is getting volume above this, which is the yellow line, right? So VPOC's above. And then I want to see them retrace into that level and hold it and bounce with a aggressive buyer, right? So this one was rather quick, but technically valid. But this one's clearly better because you actually got right. If you knew the voodoo range level, this one's better. I guess if all you had was the VPOC, it might have taken you 2 tries, right? And that's okay because the second one pays really well, right? Now what's cool is if you missed that, what I was going to say, because you identified this area, this star becomes a great buy as well. And when you're using Simon's algo, you could do the exact same thing. You just wouldn't have the diamond. So you'd have to measure this one and then measure this one, right? And keep going till one of them held. So you'd get this, right? You do the exact same thing on his algo, mark the high volume node, which is about there, and then you'd look for them to get volume above it, which happens here. His is just these dashes, they don't connect with the line. And then any sign of aggression, see, he does not have algos here or here. So you don't end up getting long on this and missing out or getting stopped, but you also might not long this one. But thankfully, it does trigger you in right here. And that interacted with that high volume node, so it's good, right? So on Simon's, you just get in a little higher and a little later, but it's going to work more often, right? You're not going to have to take this extra stop trying to be aggressive. But you can see, like, it doesn't look very, if you look back, right, and you think about how long you have to wait to get this long, like, remember, we were short here. So I said, you know, can't get long yet unless you're targeting the channel. Can't get long yet unless you're targeting the channel. Well, here you could target the channel and get long, right? Here you probably could get long, but then you'd wait again. Can't get long yet unless you're targeting the channel. Can't get long yet unless you're targeting the channel. Can't get long yet unless you're targeting the channel, but I know to watch for a long. And now it's like, okay, most aggressive long you've seen this entire time, right? And when I say aggressive, I mean like it could actually reverse back and get to the other side of the channel at least. But it's aggressive because it might not work the first time. And so this is your second opportunity to be aggressive and target back up here to this red line or this red line. And so, and then this one here is the conservative entry where you've confirmed that the bearish move has ended. You can see that the purple bars, the purple background stopped showing up, even though we're getting down bars, right? We're making a higher low, all sorts of ways to see it. But I've got confirmation on the algo that this is a safe place to buy, quote unquote, right? And so that gets you your target, which I said before is this red line, right? So all's good, no matter where you got in. The question is whether or not you got two exits, one here and one here, or if you just held it all for here. One way or another, it's a good trade. So, like I said, I traded this with the live on YouTube. So if you want to see this overnight session, I was actually trading it. We did get along somewhere. I guess that might have been it. I think it was that right there. I think it was this was the long it took, I think. And I didn't hold it as long as I should have. And we talked about why that is. But what happened this morning is we peaked out here, and then you can see that bearish momentum, the purple, came in again, right? So as soon as you start seeing this here, I know to back off on buying these traps unless that goes away, right? So if I would have been buying all these traps like this, there's a trap back into this because it crossed that line and bounced, and I'd try to get back to the other side of the channel, right? That's really the only trap I see here. That's the primary one anyway. But that kind of trade is what I would do in balance. Well, now that balance period has ended, right? And we drop pre-market. Now, same thing here as we just talked about. It's really bearish, but we're so far away from this channel that if you want to buy here and target the channel, especially if you have a voodoo range level there, some other reason to think we might return there and it acts as a magnet, well, then that makes sense to me, right? But otherwise, you're trading in the wrong direction because all of the momentum at this point looked bearish. Now, it doesn't mean it's going to stay bearish, but if all you had was this, pretty sure, or if you were on Simon's algo and all you had was, what time is that? 7 something, right? 7:30. If all you had was this, even here, you'd probably tell that, like, I'm going to be aggressive. The more aggressive way to trade would be to trade long, because the purple bar star that usually works only got me to the other side of the channel and then reversed, but it did trigger me pink bar star, right? And like the bear trades are working well, and the bull trades are like flopping. They might get you something, but they're not like continuing, you know? So bears, you can just tell just from doing that, the bears are probably in control. And if you want to know when that stops, what you'd have to then do is wait for your wave to potentially end, and then measure where the volume is, and you'd see that the high volume node is here, and you could manually look at that, just like we did before with this one, right? Now that one's still going to be valid, but we got above it, this one that we measured before, we got volume above it, and we would have had to bounce off of it to be bullish. But now if we come back up and reject off of it, it's bearish because it's still valid. There's still trapped traders there. So yeah, what we would have to see to be bearish now is for it to reject off of one of these because it's gotten volume below it. To be bullish, we need to get volume above this and then retest it from above. So you could trade this as a mean reversion trade and you'd be out of it here, right? But this buying this just because it's under the channel is aggressive because you're counter trend trading, right? So you don't want to hold runners. You just want to take most of your profits here and all of your profits on this other side, right? But now you can see what happened. They came up. Now we are trying to develop volume here, right? So this could be your first long if you weren't paying attention in London and you didn't know that we had trapped traders there. It makes sense to buy this. The problem is we haven't broken over them too. So most likely, yeah, see it stops by like 2 ticks and then comes right back again. So it's like you just have to be a little bit, you have to be willing to take it twice. And I believe that one works. Does it work? Okay, so maybe you'd have to take it 3 times. This is by far the better entry is the green bar. That's always the case. The stars usually give you scalps. The green bars usually give you continuation. But the other reason the green is better is because we've gotten a bar that's bullish with a POC above this volume build from before. See, when this one happened, all the volume was underneath it. And when we did get volume above it, they closed bearish. Even on this bar where there's aggression, all the volume's down here. It's like, it's a sign of aggression, but it might take some convincing for shorts to get rid of this, for sellers to stop fighting. Well, once we've developed some volume up here, which happened in this zone here, these candles might not be good candidates to buy, right? But they identify, it signifies to us that we've now gotten a little bit of volume above this old area that was acting as resistance. So when we pull back and find support at the high volume node, and we get a sign of absorption in this case, there's a good chance that that lifts off. And that is a very reliable trade that we'd use every single day. And I believe Simon took that. It was a little bit too early for me, 30 minutes before the open, but that is by far a fantastic long, an A+ setup, exactly how it's supposed to work, right? Your stop would be able to go right under this, and your entry would be anywhere in this bar's range. So you could buy here, you could add here, right? When you get another one, if you didn't add in here, when you get another green one, that's an add too. Because if you look, it bounced right off it, right? So if you didn't get this one, you can get this one. And if you bought 3 here and you're willing to take 6 and you miss this add, you take it here. At least I do. Okay, then we spiked up. All right, we can just start this all over again, right? It's just the same process over and over and over again. There's the high. Volume is way down here. The only way we can be bearish after we see this here, you could be bearish right here, but the only way you're going to expect this low to have any chance of getting taken out is if we develop volume up here, down here, and then reject off of this high volume node. Otherwise, they're going to use that as support, and we can just keep buying aggressive signs like that. So if you think it's still bullish, they bounced off of this, and they're trying to get it to go higher. The question is this bullish or is this balance? And the other problem is it's the open. And then the third problem is I believe there was a Fed speaker, right? So you're dealing with a lot of variables. The way I look at this, I didn't buy that, by the way. But if you were bullish and you thought this looked bullish, and you bought this one and this one, for the same reasons, you could technically try to take this one off of this if you thought this was a new low, right? The problem here is that there are probably trapped traders up here above that volume, right? And if you look, here, I'll draw it again. So draw to the high and off the high. So that's all the volume in both of those is in here, right? The way to think about it is that's what bulls need to hold for this to be bullish. And so you wouldn't know it for sure here. You might short that and just target that high volume node, right? And then maybe get out right there. But then once you see that this wave down has ended, and you see that all the volume is down there, you can't be bullish if they put in volume under this and reject it. And you need a setup to get long. So that right there is pretty aggressive considering that you've already made a move up and you're literally right at the area. You've got see these distributions up here? All of this volume could be trapped, right? We just don't see an algo here to remind us of that because there's not as many algos on Simon's as there are in mine to know that that they're potentially trapped. But this one is not barely as good as this one because these, if you recall, were based off of a low. And I'm going to move off the low. This line was based off a move to the high and off the high. So really, the way that setup's supposed to work is when it's the volume draw off the high, you're looking for shorts underneath, and when it's the volume drop from the low, it's looking for longs above. So if you flip that, you're gonna it'll work as long as it's still bullish, but when it's not bullish, it's gonna stop working. So you gotta stop doing it, and probably reverse your position. So instead of buying this, you'd have to sell this one, although that one's a little bit premature because you haven't developed volume underneath. So what you really want is for us to get some volume underneath there. And see, you could make the mistake easily if you didn't trade this right and you thought this was bullish. You could easily make the mistake of buying these, right? So it is really important that you know that these trades only work when you've got the phase of the market correct. You need to see momentum, and it may not be that clear to you that there's not very much momentum here. And if it's not, because it wasn't to me at first, so I needed to add extra signals to show me. Now I wouldn't have known for sure here, but by the time I get this one, see how the pink has gone away, and we've got 1, 2, 3, 4, 5, 6 pink, which is bullish momentum, and now we got 1, 2, 3, 4 pink. Right there, I'm like, slow down. Momentum is potentially like resting, right? And then I could do my measurements and say, okay, we're actually getting less volume, I believe, on the high. Oh, no, more. So no divergence here. Oh yeah, slight divergence here. That's a problem. Clear divergence here. Not even a question. That there's less volume here than there was at the high, right? Less buy volume. What are sellers doing? Well, they're trying to consolidate, right? But look at the volume. They had low volume down here. They are pushing with all their might here, right? So what you can basically do in this kind of situation, if you're really still not sure, is it bullish or is it bearish? What you can do is, if you can identify that this is the spot where bulls started to get active bears started to get active and bulls started to stop being active. And if you look, this area is actually quite condensed in range, right? So let me just erase these lines. So what you can do once you see that is you can actually mark off that whole area because it's only like 2 bars worth of trading range. And that's what happens when it gets so choppy and tight in Globex, and actually this is regular trading hours, but it was trading like Globex. This is actually at the open, right? And you can basically say whichever side of the market owns that area, that's the side that's probably going to get continuation. And so you would then most likely miss this and you'd miss this. But if you got the retrace and the rejection, now you know, well, you can be confident that once you've developed some volume under here, it's going to be real tough for bulls to take this high. because, yeah, they're all trapped here, right? So you'd have to trade the triangle or the purple bar, right? But for me, I can just see it structurally. Really, the algo signaled here, right? So anything that returns into these zones, once you've identified that's volume underneath and they reject, it's good to go. I don't need another algo signal. They've already told me to sell this, right? They've identified the area and the timing was right here. I'm actually getting in late here. So I don't want the algo to tell me when to get in late, right? I want the algo to tell me when to get in on time. Well, in this case, it's these orange bars with the red diamonds in the direction that I want the market, that I think the market is likely to go. So that's how you would have caught the short here, right? I don't have a great way to catch this right now because there was no pink bar here. So even an aggressive trader would probably not take this trade. Plus, especially since it was right before market open. So let's keep going. Sorry, this is kind of taking a while. All right, so now we are bearish. How do I know? Because we used to be pink and now we're purple, right? I am not going to aggressively buy these. You should start to see that this is repeating itself. It might be getting boring because it's literally the same thing over and over again. When would I buy this? Only if I thought that I had risk reward to get me back to the channel. Do I know? So I skip it. Why? Because it's probably going to reject. The hint here is that if you want to trade momentum, you trade momentum when these fail, right? When not fail, but when they hit their target, when they actually do what they're supposed to, when they hit their target and they reverse, this is your momentum entry, right? That is as close to a breakout as I'm going to take, and I need to see volume, but that is the only way I'm taking momentum trade, and they fail a lot. Momentum or breakouts and momentum trades fail a ton. So just be aware that you're going to have to deal with like a 40% win rate if you want to only trade momentum, and you don't want to just be patient during this time if you didn't catch these, because these trades were not momentum trades. There was not bearish momentum here, right? They were just well-timed entries into a trade that happened to like an easy layup that happened to roll into a big bearish trade. It didn't have to do this for that to work, right? If I get short here or here, and it comes down and it gets me 15 points back to my support level, and then I get out most of my I get like out of 6 of 8 of my contracts, and then it comes back and it takes out my runners, that's a win for me, right? I'm making money in that situation. But when the runners pay me, like I just stumble into a big trade. Well, here, if you miss that, or if you want to look for an opportunity to add, really the only chance you'd have is either to break out of this, like a physical breakout. In other words, whenever you break a green line, well, we already know that you're likely to get bounces when you break green lines, right? So then the other option, this one isn't as good because you've got a green line run underneath you, but if this star and this star were positioned up here, and this yellow star broke underneath this green line, like then maybe it would be a good place to take momentum, but it really needs to be as they break support. This one you're a little bit early, right? But technically that is a sign of bearish aggression. So if you knew you were bearish, I mean, that works, sometimes, as long as you're right. So same thing here, purple bar, green bar. Where's our target? If we were buying back to the channel, why would we buy that with a stop of 15 points and a target of 3 points? I don't know, but that's what the algo is telling us, right? Is that there's likely going to be some kind of a retracement back to the channel here. It's alerting us to it primarily because when it reverses, it's actually a good chance to add to your short. But if we were way down here and we got that same exact signal, I could buy it back to here for a scalp, right? Notice purple bars are increasing in number. See that? How we got lots and lots and lots and lots of purple? We are not going to turn around. I'm not looking for a buy here. This is heavy, heavy, heavy momentum. We did get back to the voodoo range level. See that? And so if I hadn't taken profits here, I'd definitely be taking profits there. I get that blue arrow, which is a new signal I'm working on. It's not a buy signal, but what it means is that we're getting overextended. And so if we can get a purple bar, if it's a blue one, if we can get a purple bar and we can trade above that purple bar on a bullish algo, right? It's got to be an algo that's a bullish signal. And it trades above a purple bar. Okay, we got another purple bar. There's nothing yet. There's no algo here. It's just a purple bar, which is basically like price is dropping because buyers are pulling their orders. I need to get above that purple bar and get a bullish algo. Right there. Okay, bullish algo star trades above purple bars. After this blue arrow, this is a good buy. Is it going to go all the way to the top? No. It's going to go back here, right? It's probably going to go a little higher than that. And even if I didn't have this blue arrow, I'd know that I could scalp this back here, right? But the blue arrow tells me that this actually might have been capitulation. Or exhaustion, sorry, not capitulation. Exhaustion. They're running out of steam here. So there's a chance that this is actually the low. I just don't know how good of a chance it is. I don't have enough data. So I'm not trading it aggressively, but I've seen it work, right? I just don't know how often it works. This time you needed 2 tries. If you put your stop right underneath there, they took you by like 2 points and came right back in. I just got to buy that again. That's just the way the market works sometimes, especially when you're working against aggression, right? So if you took the aggressive trade against momentum, I mean, sometimes you're going to get stopped out and it's going to come back in. If you thought this was a buy, this is clearly a buy too. And it works. We get back up to the top of the channel. That's all I wanted, was just to get back to this. See where the blue arrow is? That is my target. Right? So it's basically saying we're exhausting. There's a good chance we can get a mean reversion trade in here, as long as you can find an aggressive buyer. This aggressive buyer tried. They traded slightly underneath him, and he came right back again. So the second one is always your better one than the first one. But it's hard to take just the second one, because if the first one works, then you miss it. So most of us just take both. So that would be a good mean reversion trade there. And there's a chance that this is the low. To make it the low, what has to happen is that first sign of exhaustion, that area, which is also a voodoo range level, needs to be like thoroughly negotiated, and buyers need to claim it. In other words, they need to put volume above it, and then they need to come back and test it and reject off of it. Otherwise, it's going to go back to being bearish, right? And so you can see that they tried to get above it and they just failed to go anywhere. So this is your aggressive short if you think it's still bearish. Where's your target? Preferably down here, but your first target is to get to the bottom of the channel, because even if it's balanced, you're usually going to go to the bottom of the channel, right? You might go further, but this would be a very good place to take like half off or even more than that, and then just let your runners run if it's still bearish. And then this is purple bar, green bar, right? And it's got that little blue diamond on it. That little blue diamond only works if this is established support. Established support is actually this, right? So if this blue diamond shows up again down here, it's a great buy. This one is a little bit too premature. So they do not, so your sell runners pay, and they just don't give you an opportunity to get through this. Buyers just straight up give it up, right? Notice you got these yellow arrows, which are the exact opposite as the blue ones. So when sellers take these, the only way, so now, as long as you stay under it, it's bearish. But if you can get up above this, there's a chance that you could bounce it, right? But as long as you're below it, it doesn't. Those arrows are just like basically it's as if you got above this blue one, right? It's going to be really hard to take that back. So once you get below the yellow ones or above the blue ones, and you back test it like this, and you give aggression, that is a perfect sell. I mean, technically this one is also good, but this one's better. You can even sell this because you've gotten the confirmation, or you've gotten the signal, and then you got confirmation here on the triangle. So you need to take that, right? Okay, there's the blue one again. Sorry, I went too far. Here's the blue one again. So remember, the rule is I can mark the area, first of all. It can become support resistance. Second of all, if I want to trade back to the channel, and I think that the that the trend is exhausting for the time being, I need it to trade lower, and then give me an algo signal over a purple bar. Now this one is a little tricky because this bar itself is purple, right? I'm not sure. I don't have the data for whether or not that's good enough to take this to get back to the channel. I don't know. For now, I'm waiting until I get the purple bar after it, but it might be good enough, right? So there's my purple bar right there. I don't know if you can see it because there's purple in the background too. This is my first purple bar after my blue arrow. We went under it, right? Now we also put in a yellow arrow here, so this level is going to be tough to beat, right? It potentially. Oh, and then there's another blue one up here. I didn't even see that. So basically, this whole area here is now like the line in the sand, but now technically I've got the purple. I've got the purple arrow or purple bar, and then I've got an algo signal, and that bar beats the purple bar, right? And it. So the question is do I have risk reward here back to resistance? Well, I mean, it depends if you think you can get through this. And my guess is I've established support here before, and I've got a blue diamond here, so there's probably a good chance that this actually works. But if it doesn't, I'd have to decide right now if I was willing to take it a second time. And if it doesn't work in this case, I probably would not take it a second time. I'm not actually sure if it does. You get another blue one. Yeah, it does not work. So the problem here, most likely, like I said, I don't have the data on this quite yet to actually take these trades with these arrows. But I think what happened here is we established potential support, and then they rejected it and it established potential resistance. Said this is support if we can get over it, right? Or we can get a purple bar and then break over it. But we just failed to get through this. So it got the reaction we expected. It just didn't go anywhere and it reversed. So I'll have to look into that. And that's why I'm not trading that yet, because I don't exactly know when that's best. And it looks to me like when it gets really choppy, these arrows might not be all that helpful, right? Whereas when it's rangy, it's a lot easier to trade. There's just nothing to do here unless you want to keep drawing the DVPs or draw the volume profiles. Here, let me erase the lines. And so then again, if you want to try to get the long, you got to get over that. Okay, got over it, finally, right? Got over it. There's really no trade here except for to get back to the channel, in my opinion. I don't have, oh wait, did I? Yeah, I did the right one. So I don't have a way to get this right now, and I'm okay with that, right? That's not a problem. I don't need to get every trade. But now that I've gotten above it, if we come back and retest it and bounce, it's probably a pretty good long. I think that has a star, in which case I probably would have taken this. Yep. So these are good entries for longs, in my opinion. These are fine. And what happens? They run into this and reject. It just fails. Sometimes it doesn't work, right? That's just the way it goes, and you have to manage risk for the times when you just maybe didn't have risk reward. See, the problem here really is that our signal that we might be bullish was down here, right? And then we bounced right off of it and just ran right into resistance. So if you want to skip some trades that might have a higher possibility of failing, skip the ones where the resistance is right above your entry, right? And wait till they get above that and then come back and you'd have to wait for this to happen twice, basically. You'd get the second higher low, right? And that would keep you from getting stopped here. What I'm wondering is, do I have a short here? Okay, probably not. Probably not, because I've got my volume build down here. So I'd have to get under that. And then I have to reject here. Oh. Volume below. Hold on. Let me try this again. This is technically a low, and we might run into the exact same problem we did before. Oh my god, what's going on? Okay. Where it just doesn't work in reverse. So this is the low. We're going to skip that. We're going to say, could this be a high? Got two spots for volume to develop. Either under this or under this. If we can get volume to develop under one of those, come back, test it, and reject, it could continue the bullish trend as long as you think it's actually bullish. Or, sorry, the bearish trend, as long as you think I've got a chance to actually be bearish. We established volume below both of them, came up, rejected with a star. That should be a scalp to the downside. I don't know if it works, but that should work as a scalp to the downside. The only problem I see here is there's like decreasing volume on the way down, right? But there's decreasing volume on the bulls too. So I don't know if this works or not. Oh, it totally fails. Interesting. Okay. So if you try to turn this into the high and you try to short off of it, it just doesn't work. So what that means is that this drawn volume profile trade, it really needs to take into consideration the structure of the day. So for instance, this is the low of the session. So I want to use these draws and these levels only for looking for longs. And what do I have to do? Get volume above both of them, which happens there. Come back and bounce and interact with that volume area, one of those high volume areas, and give a bullish algo signal, which would be either one of those. And then if it bounced here, you could do it again, right? There, because it's this one, right? From the wave off the low. So in other words, only the buys will be attempted if you're drawing off the low of the day, and only the sells will be attempted if you're drawing off the high of the day. I think that's the better way to do it. That's how we built the signal. And I've been curious if you can flip it. And the last couple days, I've had a couple people in the room asking me about that, and it looks to me like you can't flip it. That you're going to make mistakes. I'm going to make mistakes if I flip it. So this was where I took my first trade. And I took the trade overnight. That was a winner. I took the trap back in. See, it went below this line by like 2 ticks and came back, I believe. And then they must have set up again. Oh, it grinds higher. So when it starts to do this, like grind, like just stop shorting, you guys. Stop doing it, right? I've got these pink bars in the back, or the pink backgrounds to tell me, but even if you're just watching Simon's, if you start to see PA that looks like this, where like the whole rotation is stuck in like a 2-bar distance, right? Like the rotations are only going 14 points and then reversing. You're not going to be able to get a trade unless you're trading a really small time frame. And if you try to short this or buy it, I mean, buying will work because it's going up, but you could get stopped, like even down here. If you try to sell this, you're going to get stopped over and over again. If you try to buy it, every once in a while, you're actually going to get stopped out, and then it's going to go anyway. So it really didn't develop until here. So you might have taken that one, I guess. It's not a drop back in, but it is pink bar, orange bar. But once you see this, like, just stay the fuck away. This is not something you want to fuck with, in my opinion. You just don't mess with this. See that? Here we go. Buy this, get stopped, comes back in, buy it again, at the triangle, at the star, get stopped again. That's why momentum is so hard, because you're taking trades on the wrong side. You're at the top of this channel, not at the bottom, and so basically you can no longer have a 15-point stop. Your stop would have to go underneath a triangle. If you really want to know how this works, I'll show it to you on here. Let's say you want to get long. It's easier here. Let's say you want to get long. What you'd have to do is you'd have to look back. If you're not at the bottom, you're not down here at the lower part, the lower half of this channel, yet price is inside of it. That's a very important part of this. If price is above, you don't have to follow this rule because you got tons of momentum, right? But if price is inside, but you think this is momentum, or you think this is bullish and you want to buy it, yet price does not contact these lower lines and it's not down here, these buys, you can put your stop right underneath the bar, right? Take full size, right underneath the bar, good to go. Like especially this one when it traps back in, that's a very good trade. Very, very reliable. If you miss this, what I had been doing before is aggressively entering long here because I'm like, clearly this is bullish. The algo tells me someone is buying, I should just buy it. Well, the problem is my stop in this case technically has to go underneath the last up triangle. Now he's got triangles in the power bars too. I'm talking about these triangles. So the up triangles for him is orange, mine are white, and then his down triangles are red. So this up triangle is associated with this bar. That is your risk bar. This is the last time buyers took any heat. That's where your stop has to go. So if they tried to pull back and stopped out this bar or this bar, you wouldn't get stopped out and you could stay in the trade. To do that, you need to either see this signal and wait for the pullback to enter, which I will do sometimes, or accept that you're going to have a 200 to 70. I mean, it's like almost a 25-point stop. It's like a 23-point stop, right? It's too big for most people. So you'd have to like trade the micros basically to make that work. If you're normally trading minis, you'd have to trade the micros. If you're normally trading micros, maybe you'd have to use options or something, right? Something where you could control the leverage a little bit. But you can see that you can also get it here. So the same thing would occur here. Technically, it's a buy signal if it was in the right location. My last triangle was above me. I didn't mention that. It's the last triangle that's below you, right? So this is technically the last up triangle, but that is above me. Well, that one's already gotten traded under, right? So I'm getting in here with the intention of breaking out above here. I'm buying the dip, right? In this tiny time frame. To do that, my stop needs to go underneath the last guy who had that happen to him. See how if this guy got long with a stop there, he got stopped out and then they ran right through his entry. Right? Once that, it's frustrating to be that guy, right? What happens? You get FOMO. When do you get FOMO? Probably when this pullback doesn't reach, or if you miss this one, right? If you miss this right here, and instead you see it do that, I don't know about you, but personally, that's where I start to get FOMO. Right? I try not to act on it, but that's where I start to get FOMO. So the solution to that, if you have the algo, I'm not saying this is like a horrible place to buy. It's just not somewhere I can currently buy because it's too aggressive. So instead, what I want to see is I would have to see a bar like this with an actual sign of aggression on it, or in this case, it's the sign of volume absorption. So like sellers are trying to sell in here, and buyers are just like sucking up all those sellers and just buying anyway, right? And then sellers just like quit, right? So if I'm going to buy this, I'm so high up on the channel that my stop needs to go under this guy as if I bought right here, right? If I can't handle that kind of size, I need to wait for the pullback and preferably get in wherever there's a VPOC. So right here, there's a dash line, and it's nearby this. It's where volume got developed above this bar, right here. That bar right there. My ideal entry is that. If I want to use like a limit order, it's right there, right? I'd have to see this first to confirm that it's probably still bullish. I wouldn't get in right away, and I'd accept I might miss the move, and I'd get filled right fucking there at 1190, and then my stop needs to go under that 1180, let's say. That's okay. 11180, I mean, right? So this is an okay trade for me to take on big size. But my stop goes down here. The trouble is, and then you'd have to take profits as you go. Well, what if you wanted to do that here, right? Well, this previous triangle, we've already traded underneath it. In fact, that's why we're looking to get long. The triangle before that is way up here, right? So the higher you are in the channel, the less likely it's going to work. But if you want to try it, the idea is get a long that comes back into there. And then put your stop underneath it. Right there. So any way that you can get long, into right there, you'd basically just like limit by, let's see, this one, right? Yeah, this one or this one. We'll say this one. So you limit by right there, and you get low, right? Now, in this case, it doesn't break this high, or if it does, it traps back in. Like, I would just give up personally. I'm not going to be a hero when I'm buying so high on the radar. That's not my style. I'm usually not buying that high on the radar, but if I am being aggressive, I'm getting the fuck out right there. Even though I didn't take profits, I'm just like, nope, not going to turn this into a loss. Not when I'm buying that bad, right? If your entry is aggressive, your exit on that needs to be aggressive too. So I would want to exit as it broke over this. It might just barely fill me. And if it didn't, I'd be like, nope, out. Right? And now that it's broken under this, now to trade again, to trade bullish, even like it's purple bar star, right? Once again, my stop now needs to go down here because I'm buying this as a pullback, right? So the only way I'm getting long here is if I can go back to the last triangle that I'm above, this one. See, I'm above that. Truly, if you want to be safe about it, you don't want to have to enter twice. My stop needs to be here. If I think it's momentum, and I'm buying with momentum, I can buy anywhere in this area, and my stop goes there, right? So if you didn't take it right here, you just miss it. And that happens. It rips. Did we take this trade? No, I don't think we did. I might have. I don't remember if I took that or not. It's valid. It's purple bar star. It's just kind of aggressive. Then we gotta trap back in here. Oh, this went too far for me to trade. Wouldn't touch that. I just missed that on this one. Let me see if I would set it up here. Did it set me up here? I don't remember if I took this or not. I kind of think I might not have. This one did not set up for me. Okay, there's nothing to do here. All right, this one here is a trap back in to this. Right, I'll show you here because there's less lines. Easier to see. So right there. Oops. Go back. That one, trap back in. The problem is we have crossed that line, right? The line in the sand. So there's a good chance that this is actually bearish because of this stopping out. And like I said, you don't really want to take that twice when you're basing it off these triangles that don't get beaten. Or the triangles that do get beaten. See, this one got beat and then trapped. They trapped the sellers, right? They came back into it and bounced. This guy is the last one that happened to. Is that true? Hold on. There's no more buyers here on this side that did that, where you got another extension. So this is the last one. So once price gets under it right there, you broke that trend. Okay. It's hard to see. Oh, wait, there might have been a way to catch this long, this short. I just remembered. You could do it potentially this way. Oh, wait, it's not that yet. Fuck, you could have taken it. I forgot to do the draw again. So that's the new high. Algo signal. Algo signal. Right? Either of those are aggressive sells. So now you know you're bearish because that works. And actually, if you can get back into here, it's up here. You could reject it. So, but the problem is we've gotten underneath this, and it used to be really bullish. So those guys are trapped, and so when they even though this is purple bar star, and you can technically try it, it's not going to work. And even though it's actually a trap back in here on my algo, it broke a green line and bounced back. Green line broken, bounces right back. It's just not going to work that often. Because of the fact that you got under this. Now, the question is what happens when this comes back again, right? there's certainly reason to think that if they were going to keep being bearish, that it would have worked right here. But yeah, I believe this continues higher. Yeah. So like, see when they can't get it to go any lower. You've got it was weird PA today. It looked like it was bearish all of a sudden. This one just didn't, they just couldn't stop them out. And then it triggered again. So it's like, you got to ask yourself, like, how bearish is this really, right? And if you weren't sure, you draw the DVP and identify that all the volume is actually here, right? And so as long as I can get over that, I can be bullish. So if you miss that one, I believe that one goes. Then if that was an algo, you'd take that. Or if it comes back again and makes a star, you'd take that. Let me see. Right there. That's your high odds entry. This is your aggressive entry. This is your, like, I know it's supposed to set up here, but it's not. So like, I probably have an algo here. And then this is your primary entry. And those are usually going to lift. See that? Usually going to lift. Like, you could literally just do that trade over and over again once you get good at it and do really well, right? It chopped here for a while. It set up. It pulled back. See, I get a speed bar here to tell me to get long. And I showed you this earlier on another spot where I got the early warning and Simon got it here, right? But one way or another, we all knew in the room that we should be long there, and we were. I just didn't hold it very long. And I didn't get this higher target. You can, now we're technically at the high, so you can measure this. All the volume is way down here. I didn't draw that very well. The high volume node is there, a range. We have pink bar followed by orange bar, and that one had a yellow arrow on it, so that one's going to be hard to come back through. It's a really good, it's a decent short, right? But you got to be willing to hold it through this. Okay, now we get volume below. Here's the level. We get volume below it. Do we come back and test it and bounce? No, it just doesn't set up. The high odds trade just doesn't set up. Okay, now we do, yeah, see how, well, I know it's bearish here because it's purple. So like, I'm not going to fuck around with trying to buy this, even though it's coming back in, because this is just too scary to me when it's purple. When you're watching Simon's, I think I was talking to somebody in the room that thought that looked, where was that? 1140. It's harder to identify that this might not be the low, right? But you could, once again, draw this, and you can see, well, if it is the low, to be bullish, I need to get volume up here. So if I don't want to be aggressive, I should just avoid these, because it's probably going to get stuck there on the first try anyway. And then it just goes lower, right? And then you're like, okay, well, here's another low. So if I don't want to be aggressive, oh, that one's much better, right? So that's a good reason to be aggressive. All the volume is at the low. You got a sign right at the bottom. You got volume above it. You have algo signal that interacts with that level. And that one gets you a move. And then it rolls, but it gets you a trade, right? Now, you could we talked about the momentum trades. That works this way too. So once you identify that it was bearish, which maybe was this higher or lower high, let's say, and you're like, wow, I really wish I could sell this, right? Well, the only way you can is to go back and find the last purple bar and put your stop behind that. Or sorry, triangle bar, and put your stop behind that. So that would work here. Okay, what about this one? Now I want to get short here. Well, you're right at the bottom of the channel, but your last triangle bar was here. So if you really want to do it, you have to do it with your stop up here. So preferably on a retrace. Maybe this one, but I don't think I would have caught that, right? No, okay, there's one. All right, what if I want to get short now? Well, find the last red triangle. Whoops. Let's do it this way. Now this one had that volume at the low, so it was a little bit, might be a little bit dangerous to do this. Because they can get trapped, right? If volume is at the low, they can get trapped down there. But what I'd have to do is I'd have to put my stop up here and preferably get a pullback after I see that star. Right there. That's the entry I want. Or even this is okay. Right? That's an okay. That's how I trade momentum. Right? I get that pullback into, because I know that's where I want my stop. Why do I know I want my stop there? Because every time they have a red triangle before that, when they get behind it, they just roll over. Right? That's not going to happen over and over and over and over again. Right? And so the safest place would be to find one that, like, where that same signal occurs, and then put your stop behind that. So like this one, see how it got behind him, rolled over, and then it got behind him again, right? That's what they're gonna have to do to me for this to work, because I've got my stop here, right? So my entry is in this range, preferably, like right there. So for them to stop me, not only are they gonna have to go back and come back and go back and come back, but then go down and then come back through me again. Like, how often does that happen, right? We don't see that happen very often. Not if it's bearish. So this is purple bar, green bar, but same problem here as we were seeing before, where we don't have any risk reward for the extension up. And if we did this, we'd have to get above this anyway, which hasn't happened. So we keep going lower. You can see that this reversal did work. Right? The only way I would take that is if I got a retrace after that. This one's just a star and a green bar. We could take a trade back into the channel, but I'd be taking my profits right there. Right? Because I got back to the purple line. Once again, if you wanted to short this, I'd have to put my stop up here. I'd prefer it. Before I even saw that orange bar, I'd know I'd want it to be in that area. Not there. So I would get that. And I'd probably stop, right? Now, if I would have noticed, there's a good chance, because we talked about this at the beginning, if I would have noticed that the low was divergent. See how this low had very little volume and this low had a lot of volume? Well, all this volume on this divergent low was up here. And so if I suddenly said I want to get short here, well, maybe not, because now I've got all the volume there. So if I get above that, it's not bullish. It's not bearish anymore, right? So now, once that happens, I want to pull back to buy. So I want to buy this. Preferably with an algo signal, please. No algos, no. So the only way I could get this is if this volume is at the bottom. Oh, nice. I could get it. Okay, so see this volume off the low is at the bottom, making these two buy candidates. And I promised I'd show you where that low is, and that's it, right? We got over both of these volume profiles, the volume builds, right? We pulled back into, in this case, the wave off the low, and we got a sign of aggression. And we got two signs of aggression. Now, technically, I think you should be putting your stop below this, personally. But if you're okay taking it twice, you can put your stop right here. And then when you get stopped out and it triggers again, now you put your stop where it belongs. That's okay, right? I just prefer to look over here and say, I think this is bullish. I want this to be a higher low. If I'm looking for a higher low, the rule is look for a triangle to the left. Okay, it's right here. So they better not stop me if it goes there. If that's my stop, I'm totally cool. Once I see this star, I might not buy it right away, but when I see it pull back into here, I'm buying it here. I'm not waiting for this star. I already got my entry signal. I just know I want to be long in this range. So I'm buying this. I can take that with bigger size. blasts off. If you didn't catch that first one, now you have to start playing the momentum game again, right? So this star is not far enough back. Your triangle's here. If you were long from the beginning, my stop now gets trailed to here, right? You get this star, you want to pull back into here, you don't get it, no opportunity. Okay, this is way too late because you already got an apex, then you get a green bar. That sucks, right? So now you'd have to go, sucks for a buy, I mean. You'd have to go like that, and you have to go to be short and bearish this chart. I need to get under here and develop volume and then back test it. And they just rip right through it, right? No algo signal on Simon's. He just misses it. On mine, what time was that? 14:25. And then we'll close this up. So on mine, well, first of all, at the low, you got a clear signal here. Then you might get a scalp, right? Then we got all the volume still. You've got 1, 2, 3, 4, 5, 6, 7 purples in a row. No purples. 1, 2, 3, and an algo signal with a blue arrow, right? This one was not as good because you've got momentum. The momentum's going down. Now you've got this, right? And so we're pretty sure that we're going to get a retrace. Doesn't mean it's going to reverse. We don't know it's the low. But when we draw the volume profile and we see this interact with it, we know we can buy that. Right? Now here, I got this same signal. Triangle down star. It's a very aggressive entry. And then here, I got this aggressive entry that we watched together. That I said I skipped, even though this one worked. Right? And this is technically an aggressive entry in the right spot, and it's got a speed bar. You have to be really convinced that this is going higher than this because they're not going to work 60% of the time. They're going to work like 40% of the time. So you need more than 1-to-1, right? The good news about this one is my triangle to the left is over here, right? Right below me. So even when that gets, if they would have traded a little lower and then bounced without taking out that, then this becomes a really good buy. It just didn't set up. Just didn't do it. Right? That, I don't have a way to sell this unless the DVP sets up at the highs. Nope. High volume nodes here. I need to get underneath that and retest it from below. It just doesn't happen. We get, once again, another aggressive buy opportunity. Your stop on that, if you wanted to be bullish. Can't be here. That's above your entry. It'd have to be all the way down here. I'm not doing it. Wouldn't take it. Wouldn't take it. Otherwise, you just have to put your stop here and take it once. And just be okay. Because if that gets broken, it's done. So you could take it with your stop at a regular place and just take it once. This is a trap back in. We broke the red line. Came right back with another algo signal. It's just very aggressive because we've been so bullish. But if you look, 1, 2, 3, 4, 1, 2, 3, 4. I might not know it's not bearish there, but now I've got 1, 2, and I get another. Yeah, it's probably settling down, right? It gets one more push. Now this went 2 and this went 3, so I'm not taking this one, personally. And then we went 2. Now I can start being more aggressive with the shorts. So I might have taken one stop, but I believe that one works, and it does. So now let's just quick look at this just so I can give you a promised view of what might go on next. First of all, in the big picture, and then I'm just going to, this is getting really long, so I'm going to close it out. Hopefully this has been interesting. Let's see. And on Q, what I had said earlier is we've got all the volume down here got rejected, right? We're going higher. They got lots of volume into the close. That's very bullish. We haven't broken this high yet. There's a very good chance, I can't see my tools. There's a very good chance that this voodoo range level gets tested. 11,286.25 probably gets traded through. We then have single prints all the way through here from this morning, right, to this purple line right there. 11,333 is probably the first spot that I'd really be considered looking for a swing short, and it's only if it sets up. Otherwise, down here, I'm expecting range expansion, probably to the upside, because we have all this liquidity up here. So my guess, right, and it really is that we're probably going to continue this bearish or fucking dyslexia sucks. We're going to continue this bullish move, right? But notice that we had 1, 2, 3 followed by 1, 2. So bull momentum exhausted here. So we got this rest period. This rest period can go on for literally hours now that it's Globex. I can use these down here to identify that it's still really choppy trading. What I want that to look like is long stretches in both directions on both sides. Spend at least a couple of bars up at the top, spend at least a couple of bars at the bottom, kind of like a sine wave. That's when it's actually tradable. When it does this, not very fun. You're getting stopped out a lot, right? So I will just wait until the good PA comes back. And you can see here on this one, the reason I even use these is I'm not even really looking at that closely. I'm just getting a feel for the order flow and the timing and stuff. And you can see that right here, the long and the short look about the same in size. All of a sudden, the long gets longer and the short gets shorter. Guess what that means? Longs probably have control until that stops. Well, that stops right here. Shorts, or the long-sided waves start to get very much smaller, and then the lower ones also are getting smaller. So that's not yet a sign of exhaustion until right here. And then here, this one got longer than this one. So if I was looking for a spot to potentially roll, it would be right here, this, to make a roll. That's the very first opportunity I would even think about it, but it just doesn't look that bearish. If I really wanted to convince myself, I'd have to draw this off the high and to the high, identify the high volume node, and say I can start to be bearish when this kind of trade works. When it fails, I'm immediately bullish. If it's not gonna, if that high odds trade fails, there's a good chance bears are completely stuck. And so now I just need bull signals. If I want to, I can go down to the 16 tick and I can look for them there if I want to be a degen, because then I'm going to have a whole lot more signals. But some of them are going to stop before they work, right? So you got to decide how willing you are to trade over and over and over again. But really what I want is for them to pull back in here and bounce. Otherwise, I need them to develop volume down here and then reject. That's the only way I'm going to get bearish. So that's where I'm at. Like I said, I'm guessing we're going a little bit higher than that. They might just grind higher though because it's Globex. Hope you learned something. You can always send questions to me on Twitter at RedVenTrader. If you want to know more about the trade and perform algo, which looks like this, you can talk to Simon at trade, the letter N, perform at gmail.com. That would be for questions about the trade and perform algo or subscription to the room. Okay, so there is a subscription fee. There's different levels of membership. Whether or not you just want to watch Simon trade on his screens, or if you want the algo on your desktop, like I have it, so I can trade it whenever I want and customize it however I want to make it look like something that I built more onto it, right? If you want to get to that level, then you gotta have premium membership. If you just want to watch his screen and see this all day, but you don't have it on your desktop, you just need basic membership. So talk to Simon. If you let him know that you follow me, he will give you a couple extra days free in the room just to check it out. You can just kind of come visit, ask questions, get a phone call with them, and see how the room works for probably a week. If you ask, just make sure you mention that you follow me. You'll get some extra attention that way, and if you ask for a few extra days, he'll give it to you if you're my follower. So I hope you guys have